Most people don't realize it, but we are all living inside someone else's financial system. Every dollar you earn flows through that system where someone else profits from it. But what if you could flip that script and make your money work for you first? That's what the infinite banking concept is, taking control of the banking function in your life. Well, what does that mean? You probably haven't ever considered that there is a banking function and that you could control it. But the process of banking is nothing more than the storage and movement of money through credit, loans, and repayment. We are all responsible for the storage and management of our money. We are all bankers. But most of us have given up this responsibility to other people, and we want to take that control back. Here's a simple example. One morning you're running late for work and realize you have no cash to buy lunch, so you borrow $10 from your daughter's piggy bank. You hit the ATM after work and pay her back when you get home. This simple exchange, starting with her storing money, is banking in its simplest form. What if she had plans to go see a movie that day and now she can't? Your borrowing the money cost her that opportunity, so you pay her a little extra to make up for it. She was happy to accept $11 back and see the movie tomorrow. Do you see how money flowed through the system and your daughter profited? Now consider your finances. You probably have money saved up somewhere too. If you make a withdrawal from that savings, let's say it's to buy a car, whether you treat it like it or not, you're taking a loan from yourself. Maybe you have a plan to pay that back, but you've probably never paid yourself back accounting for inflation, let alone what it could have earned if you left it growing at interest. In other words, whether you realize it or not, you finance everything you buy. You are either taking credit and loans from a bank and paying them interest, or borrowing from yourself and leveraging your future income and giving up what you could have earned somewhere else. Okay, so now let's add a bank into the picture. The bank uses your money to make loans at higher rates, and then they pay you a tiny fraction of interest. The difference is their profit made from your deposits. If they loan it out at 5% and pay you 1%, what is their profit? It is not 4%, it's an infinite return because it wasn't their money. That profit is distributed to the owners of the bank, not the customers like you. With the infinite banking concept, we create a family economy where you take control of the banking function in your life. You treat your finances as a business, that business is a bank, and you are the banker. So how do we do this? Well, first, remember, the process of banking starts with storage. You need a place to store your wealth. You can store your wealth in many places. Most people use a commercial bank, but that profits the bank owners, not you. So let's use another asset, your home. When you purchase a home, every time you make a payment, you accumulate wealth in the form of equity. When you've made enough payments, a bank might give you a home equity line of credit, a HELOC, up to 80% of that equity, and you use that liquid equity to purchase the things you need. Maybe it's a car, or a child's college education, or maybe it's a vacation. Meanwhile, the value of the home keeps going up, hopefully. As a line of credit, it does not have a scheduled payment, so you are somewhat in control of the repayment plan, but you don't profit from it. But the best place we have found is not a home. Instead, we store our wealth in a different asset, one with guaranteed value that can never go down. Future growth similar to a corporate bond. That growth is tax deferred like a Roth IRA. You have the ability to collateralize and leverage the asset like real estate. And 100% equity is liquid and you can access it tax-free. The wealth stored there is private, and it is creditor protected in most states. What is this asset? It is a properly structured whole life insurance policy with a mutually owned company. As life insurance, there is an eighth characteristic, death benefit protection. Why there? As a mutually owned company, you are not a customer. You are an owner and you receive the dividends, not the bank shareholders. Like a home mortgage, every time you make a premium payment, it increases your equity in the contract. This is called cash value. In that contract, you have the right to access money up to 100% of the cash value, no application, and complete control of the repayment terms. In this warehouse for your wealth, your money is put to work for you doing three things. First, it is your emergency and opportunity fund earning interest and dividends. No more turning to debt for a car purchase or unplanned home repair. Second, you can spend the money for the things of life without reducing the value of the asset, and without breaking its compounding growth either. Third, it provides death benefit protection for the ones you love. And if you use that opportunity fund for an investment, you can get a fourth use out of that dollar. You are already financing everything you buy. The only question is, who profits? With the infinite banking concept, that answer can be you. To learn more, visit reformedfinance.net. There you'll find free resources, and I'll even give you a code for the Nelson Nash Institute's Foundations of IBC course, free if you book an introductory meeting. And don't forget to check out the book, Becoming Your Own Banker by Nelson Nash.